we went into wartime, as we called it. The Instacart logo is a carrot. We had a black carrot during wartime. We scrapped all of the goals we had for the company. And we said, hey, our new goal for the rest of 2017 is to sign on 5 of the top 10 grocers in the world.
Welcome to Turpentine Finance, a podcast where we talk with top founders and finance leaders about what it takes to architect success. Our guests speak candidly about big business inflections, market curveballs, and how they approach decision-making so that you have the tactics and mental models for when the pressure is on. I'm your host, Sasha Orloff, founder, CEO, and self-professed finance nerd. You ready? Let's dive in. Today is one of those episodes that most finance teams spend their entire career dreaming about, right? So this is a treat. You do everything right. You go to a great undergrad, you get your MBA from a top school, you work for Goldman Sachs, a premier investment bank, you work for a super successful PE fund like KKR, and all of a sudden you join this finance team of a 3-year-old YC startup called Instacart, which ends up becoming the phoenix in the ashes of one of the biggest venture failures of all time, Webvan for all you old school people like me. You then become CFO of the company that later then becomes one of the biggest IPOs of the year. And along the way, there are these few moments in every executive's career where you have to make sometimes company-defining decisions, but you don't have all the perfect information. And so this is a prime example of that. So with that, welcome to the show.
Thank you so much for having me. And that is a very nice intro. Normally, my wife's is much shorter and much less nice than
that. Mine too. That's why we get to invent our own for the show.
Perfect.
All right. So I know right now that you have a partner seat at the esteemed venture firm Accel, but I want to start with your time at Instacart during 2 incredibly pivotal moments. First, you're stepping into an organization that is growing fast, but losing money on every transaction, which means runway is actually shrinking, and we got to solve that. Second is the Amazon acquisition of Whole Foods, the most successful logistics company in the world, acquiring a company where you are the delivery partner for Whole Foods. So I want to go deep into the scenes behind this, how you navigate these situations with uncertainty and come out stronger than before. I remember at the time, too, there was all of this chatter about whether this acquisition is going to be the death of Instacart. And it turns out actually almost entirely the opposite. So this is fun. All right, let's start. Company's growing fast. And my understanding is it's losing money on every marginal transaction during one of the most epic venture runs of all time. You step into this role. What got you excited about Instacart and what were you surprised about?
Yeah, I mean, well, I had an itch to operate, Sasha. So, to me, it was this amazing mixture of business judgment and being able to work with people and stretch some leadership muscles and be able to move and build something forward. And so I'd always had this thought leaving business school of operating. And Instacart, in a lot of ways, fit what I was looking for perfectly. I got a chance to me, working with people I like and trust is the most important thing. I've gotten a chance to do that here at Accel. And at Instacart, I got to work with one of my very good friends who was a CFO before me, along with Apoorva and Neelam and some of the leadership team there who've become good friends over the last decade. And so I was pumped. I thought it could be a big company. I thought I could make a big impact. And I was jumping at the chance to work with people that I thought were incredible humans, really smart and great operators. And I got there, and while all of that was true, the financial picture was quite different. That was probably the thing that surprised me the most. I remember a month in putting together a snapshot for our board meeting of what was going on and realizing, it was probably a couple of weeks in, realizing, hey, we lose a lot of money on every order right now. We were losing $15 an order. We were burning somewhere north of $10 million a month. We had just raised a $200 million round, but that's a lot to be burning when you only had $150 million in the bank. And we were growing really fast. Turns out growth is great unless you're losing money every order, in which case you're losing it even more the next month. It was surprising, but we certainly had a challenge ahead of us. To me, that was the first pivotal moment at Instacart was the group of leaders getting together and saying, hey, we have a problem here. How do we go fix it?
So as we're setting up, this is an important challenge. You have to create influence in an organization about how to drive change, the change that you're probably hired for. What is it in your training from Goldman and KKR that shaped how you approach this role?
Yeah, look, I mean, the investment banking and private equity and investing broadly is it's an amazing training ground for thinking analytically, thinking critically, and for really, especially private equity and banking, for kind of breaking a business up into its component parts figuring out what the levers are, why they're important, and then figuring out what happens if you move them. And that training was actually, it turns out, exactly what I did in the first month to 2 months at Instacart. We kind of, first thing was, what's the fact base? Like, what's actually happening in the business today? And how do we lay that out in a way that makes it really easy, not just for me to understand, but for someone on the engineering team to understand, someone on the support team to understand, our executive team to understand. And so we spent a lot of time not just looking at, what a finance person's P&L would be, but actually looking at what are the operating metrics beneath that? What is every line item of revenue, of cost, and why are they what they are? And then trying to figure out where they could go, right? That took a lot of conversations and cross-functional work, but really understanding, will we pay this much on every delivery for our shoppers? This is what our credit card fees look like. Why? What's driving that? And where can it go? What are best-in-class companies doing? And so we very quickly laid that fact base down. And we were really lucky in that the leadership team there was incredibly affluent and smart in numbers. They were very commercially oriented. Porva is a great technologist, but he gets what, a P&L should look like. And so when presented with the fact base, it was very clarifying to everyone of, oh, we have to fix this soon, right? And so the only other thing I would say is, you don't want to just say, hey, we have a problem. The second piece is, well, how do we go actually drive that problem to a solution? And we had done a lot of work to say, hey, we actually think there's a lot of room for improvement, and we think we can do that relatively quickly. And it was an amazing moment where the company got galvanized behind, hey, margins really matter. We want to be a durable company that lives forever. In order to do that, we got to get our unit economics right. And I've never been prouder, happier, had more fun working with 300 people and trying to fix a problem with singular focus.
A lot of companies kind of go through this. They get to rapid product market fit, and there's this like massive expansion. How do you know when is the right time to start going from kind of growth at all costs to a bit more of unit economic focus?
Yeah, and look, I think it depends on if you're an enterprise software business, if you're a consumer business like Instacart, if you're, a fintech business. I think, to me, part of what happened at Instacart in those early days is we did focus on growth, and the unit economics can change very quickly in a consumer business, right? You can pay a lot more per delivery just to make sure you have drivers and shoppers available. You can cut costs to the consumer really quickly, and that stuff stacks up. The way that I've thought about it is, first thing is, you have a certain amount of cash, you can't spend all of it, right? So you have to make sure, I know it sounds stupid, but what happens if you make some of these changes? How far can you go? How long can you go? Do you have a plan? I think the second thing for me in a consumer business, at least, was we wanted to use incentives to try to get growth to happen, but I always wanted to make sure we had sort of a model that could be durable in the long term. And so what we ended up doing, and this came with a little bit more just maturity in the business, understanding of the unit economics, we did keep investing in growth, but we always wanted to make sure we could be unit economic neutral or positive. And then we would give some of that back to the customer, right? So we were still running kind of gross margin, contribution margin, break even for a long time, but we always had the discipline of, we can still get to our long-term targets without having to meaningfully change something. We might just invest a little bit instead of getting that margin and then giving it back. Sometimes we gave it back early because we had such high confidence that we could get it on the back end.
So, I mean, kudos to the team for bringing you in at this stage. How long is the process of going through the analysis, the
Yeah.
conversations to start changing that culture to say, hey, we really want to take this seriously?
Yeah, I was lucky enough to join. At the time I was like a director or VP, kind of right out of business school, and I joined. We hired a CFO at the same time, who's a very good friend of mine. Was my predecessor at Instacart, and it actually happened really quickly because once the fact base was laid out, we were going into our first board meeting, and when burn changes from a couple million a month to over 10 million a month in a matter of a quarter, everybody kind of knows, hey, we got to have a crisp explanation for this. And Porva right away was like, okay, understand where we are. And so part of it, Sasha, is, can you get that intuition and that fact base together quickly? And do you have the right metrics that you're tracking to really know what's happening? We did that pretty fast, right? And we used to track monthly financials. We moved to weekly financials pretty quickly to know, hey, this week, what do unit economics look like? What do we think burn look like? And actually, after COVID, we moved to daily financials because COVID changed the business overnight. But it was how do we have the right level of sophistication quickly? Once we were able to share that, I think it became very clarifying to the whole group of, hey, this is not going to be sustainable, nor is this the business we want to run. The second piece is, how do we now go bring the team along, get them excited, have a plan of execution, and then go execute against it? And that was a matter of weeks where we were able to share with the company, hey, here's where we are, here's where we think we can be in 6 months, and here's why. And this is where I think a finance team and analytics team showing the rigor of the why we can get there. How are we going to do it? What gives us confidence? And then really starting to see that progress week over week. To this day, I talk to people who were at Instacart during that time frame, and there's just a lot of pride in what we accomplished in a short amount of time because everybody was rowing in the same direction, and you could see the progress on our weekly dashboard of we lost $15 an order last week. We're back up to 13. Now we're at 10. Oh, we had a little bit of a flat week. It's 950 of loss. Okay, but we made a big jump this week, and so that I think it's setting a great plan and then it's executing against it and sort of seeing some of that improvement happen relatively quickly.
Now, you were in a situation where there was already an excitement about financial discipline. Any advice for people stepping into that role that might not have that same founder? They might be reluctantly hiring because of a board mandate
Yeah.
or some other reason. How do
Yeah.
you step in the role and help drive that influence and change in a culture with a founder?
Yeah, I mean, like we had a great thing with our leadership team at Instacart because Porvo was incredibly aggressive and wanted to invest in growth, but understood sort of the financial aspects of the business, and so we had really good balance amongst our leadership team, I would say. But I've seen situations where founders actually are really conservative. A lot of bootstrap founders are like, "Hey, we like being profitable," and on the other side, you've seen your sort of more classic Silicon Valley, let's go for growth. I think the number one thing if you're a CFO stepping in is you have to understand what your founder is solving for, right? Like it doesn't help if you're solving for, hey, I'll be comfortable if we build an okay business that's worth a little bit more than our last round. And your founder wants to solve for a generational company, right? So you got to get on the same page of, hey, we really want to be this. And, I'll use the Instacart example. Like we want to be a company that every customer in the country, in the world, could be able to get the groceries delivered if they chose to. So we had huge ambitions. And that was clarifying because at times it was, gut wrenching to know we were going to burn a couple $100 million. One point we burned over $1 million a day. Like that's gut wrenching if you're a financial leader. But when you put it in the context of the only way we're going to get to the promised land, then you got to manage through that. So thing number one, really understand what your founder is solving for, and get on board with it. Like really understand it, believe it, debate with him or her about it, but then be on the same page once you have that conversation. And then thing number two is if you're actually solving for the same thing, then financial discipline can be a really important reason of why you're going to get to that finish line. And it might be, hey, if we go down the path that we're suggesting, we're putting a lot of risk on a fundraise when we won't have the metrics to support a fundraise. Or, hey, we don't have enough cash to do what you want to do. Or, we saw a lot of this in 21. We're making 2x the investment, but we're only getting 1.01x the gain on the growth side. So I want to grow faster too. Let's just make sure where we're spending the dollars is actually going to change what you want to change, which is faster growth. And I think to the extent you can come with shared alignment on what you want to get to, but a very objective fact base as to why or why not what we're doing is going to get there, you'll be way more effective than trying to bring your own subjective opinions to the conversation or try to solve for something different. Because in my experience, I haven't found those two things working very well.
Hey, we'll get back to the conversation in a moment after a word from our sponsors. There's a world where your CRM is powerful, easily configured, and deeply intuitive. Attio makes that a reality. Attio is a radically new CRM built specifically for the new era of companies. It's flexible, easily configures to your unique data structures, and works for any go-to-market motion from self-serve to sales-led. Attio automatically enriches your contacts, syncs your emails and calendar, lets you create powerful reports, and quickly build Zapier-style automations. The next era of companies deserves more than a one-size-fits-all CRM with an outdated UX. Join 11 Labs, Replicate, Modal, and more. Try Attio instantly at attio.com. That's attio.com. So I think a really good part is having the founders can get it. And when you have that support, that's great. Sometimes there's other business leaders, some of your colleagues when you're in the finance team that might not be quite as on board with financial discipline. I'm not going to throw marketing and sales always under the bus, but let's just pretend for the sake of the
Yeah.
conversation,
Yeah.
that they're sometimes like, they like more budget and they like more spending. How do you approach that conversation to bring them on board?
To me, look, you got to be really empathetic to what every person in the org is what their job is to do, right? It is hard to build a best in class sales org. It is hard to grow through marketing, and your scoreboard, it's monthly, it's weekly. We know, someone told me recently, if R&D is behind, it's hard to tell for a while. If sales is behind, right away. And
Right
so,
away.
I think thing number one is like empathize with the job that they have in front of them. I think thing number two is, educate. And I don't mean that condescendingly. I mean that like actually share what your perspective as the financial leader is. Hey, I want to build a big business, right? And here's what I'm looking at. Here's what we need to have happen in order for us to be the business that we all want to solve for, the vision our founder just shared with us. And so this is the why I'm pushing so hard. And then,
Yeah.
once you have that trust, once you have the, sort of shared context and understanding, and once you have mutual respect, then there should be healthy tension, right? You as the CFO should be saying, "Hey, I think we can get more for less or with less." And your salesperson should say, "Hey, I'm worried that we're not going to hit the goals that you've said are important without this." And that debate should happen in a really, sort of objective, passionate kind of way. But it can't happen if you don't take the time to understand each other's perspective. And it can't happen unless you actually build a real source of truth as to how things are going. And I think that last point is an important one. We on the finance team did try to have sort of here's the source of truth of what investors will see in our business. Here's the source of truth as to how the key KPIs underneath that is going. We can debate everything else, but this is where we are, right? This is our scoreboard today. And I think that ended up being really helpful. It's funny, we were sort of called the police of the org at times, but people would say, like, we love that you do that because we know you're doing it for the best of the company and not for everything else. If people know that you're just playing for the front of the jersey with that, they will respond in an amazing way. And I'm so lucky a lot of my colleagues responded in the best ways in Instacart.
Okay, so you overcome a pretty big both business and cultural shift in this by getting the unit economics back to a good place. The business is operating, and then the day arrives
Yeah.
where Amazon announces they're going to acquire Whole Foods. Can you just walk us through a little bit what is going on behind the scenes
Yeah.
when this news hits?
There's a funny saying we had even before this happened, where working at a startup and especially working at Instacart, any given day, you either thought you were like taking over the world or you were getting punched in the face. And there was like no in between. And the funny part of the story, Sasha, is the night before, it was June 16th, 2017, that Amazon announced Whole Foods. On June 15th, we had one of the best meetings we've ever had with a top 10 retailer. And we were like high fiving, like, it's working. The unit economics are going well. We had just raised 400 million bucks in our Series D. And the next morning, that announcement happens. And there's a minute of just kind of laughter. Whole Foods was over 40% of the volume of our business at the time. They were a really important global partner. And so, yeah, it's a bit of a punch in the gut of the most sort of scary logistics company in the world now owns your biggest partner. And so we took a minute to sort of appreciate the sort of irony of our the good days and bad days. And then we said, okay, well, what does this mean for us, right? Does this mean we're going to lose our volume? Does this mean we don't have a business model anymore? And very quickly, thanks a lot to Mike Moritz, who was on our board, and to the leadership team together, of saying, hey, you know, really, to be the business we want to be, we actually want not just Whole Foods on the platform, we actually want every grocer on the platform. And we had been talking to a lot of the big grocers in the country for 4 or 5 years to try to sign partnerships with them. And, they had been resistant to e-commerce because they had wonderful businesses. And all of a sudden, if it was impactful to us, it was equally or more impactful to these massive grocers across the country. We went into wartime, as we called it. The Instacart logo is a carrot. We had a black carrot during wartime. We scrapped all of the goals we had for the company. And we said, hey, our new goal for the rest of 2017 is to sign on 5 of the top 10 grocers in the world as partners. And here's a list. Here's what we're going to do. Obviously, our sales and BD team have been working with these grocers for 5 years, but it's all of our jobs now to help them get it over the line. And that might mean launching new products. It might mean supporting in sales. It might mean investing, some of the unit economics to make sure that we have the right cost structure. Whatever it is, this is what we're marching towards. And I'm so proud. Our BD team really led the way and did amazing work, but the whole team kind of galvanized behind that moment. And the work we did in the back half of 2017. I mean, yes, Whole Foods left the platform eventually, but Whole Foods was around $20 billion of total sales at Whole Foods. We signed on 300 plus $1 billion of total sales in that 6 month period. And so it was really something that actually inflected the company in a massive way rather than hurting the company.
Kind of going into that, is this so the announcement happens, you guys have some emergency board meetings, you go into war mode. It turns out this is sort of one of the best things. When do you know that this is happening? Are these BD deals closing right away? What's the moment you know that this is
Yeah, I
an
mean,
incredible opportunity?
we I think over the course of that weekend, we were starting to get calls from retail partners saying, "Hey, like, can you guys come in?" And so we had a feeling of, the why now moment for the industry kind of happened in front of our eyes. So we had some early signals that, hey, like, there's an opportunity now to change the calculus, change the chessboard, if you will, and really help these retail partners. I mean, today, if you read the earnings call transcripts, if you read, the S1, retailers are such a critical component of the Instacart ecosystem. We wanted them, and we want every day for them to win in e-commerce, and so we wanted to really rise to the moment there. And so it didn't happen overnight. There's a lot of work that gets done to figure out what the right model is, pricing, negotiating, where we're launching, all of the nitty gritty. But we felt momentum pretty quickly afterwards, and then we just kept sort of pounding away at the rock. And over the course of that 4 or 5 months, we started to see one, two, three launch a pilot, kind of whole chain type of deals, and enter 2018 with a really different sort of backdrop in the business.
So the moment hits, you guys go into wartime. What are some of the tactical parts of your job during wartime? Are you coming up with potential scenarios preemptively? Are you like thinking about, oh my God, is this a riff scenario? Am I
Yeah,
reducing my team? Am I hiring more? Are we
yeah.
just executing?
No, I mean, I think for us, we had a ton of capital because we had just raised a round, and we didn't view the change in Amazon buying Whole Foods as like a company changing moment from like a team standpoint. Or we'd been very disciplined to that point. And all intentions were Whole Foods stayed on the platform for, quite a while afterwards. Really for us, it was like there's an offensive moment we can go have. And how do we go take advantage of that offensive moment? And I would say, people talk about traditional FP&A of like what's going to happen next quarter, the quarter after. When you're an early startup, a lot of what you're trying to, or what I was trying to do was, it's less about what happens in Q3 and it's more, can we exit the year growing 100% and can we grow 100% again next year? And if it happens in Q1 versus that's not really the thing that mattered. It's more, are we on sort of the trajectory to go build a generational business, as you said? And so a lot of what we had to do was, because we had done all of this work on the unit economics in the first couple of years, we had real intuition and we had real data and support where we could say, here's how aggressively we could price. If we needed to price differently for the consumer, here's what we could do to make that happen. Here's what happens. Part of signing national chains is we were launching dozens of markets, new markets every month. And luckily we had an amazing handle of, well, how do we launch a new market? What should it cost us? How do we know if it gets to unit economic profitable in the right amount of time? And so we were kind of helping our BD team kind of know what the degrees of freedom were. I was personally spending time with some of these grocers alongside the BD team to talk about, hey, here's the state of our business, why we have 5 years of runway, where, here's why we can be a great partner to you for a decade plus. And so it was a little bit of everything. It was less sort of like this quarter scenario planning and more, how do we tip the scales and how do we make sure these big decisions we're making, we have high confidence, even if it's not perfectly precise day one, but high confidence that we can build the business from an economic standpoint we want to build while these negotiations are happening in real time. And so that's where we really tried to partner with the rest of the org.
Just for context, how big is the total finance team at this time?
At that time we probably had 20 to 25 people. A lot of the finance team was like accounting, and was sort of like rev ops, and was more of like the keeping the books closed accurately, helping with audits, doing payroll. And then like what we called strategic finance, biz ops, FP&A, kind of all in one at that time was like less than it was 5 people effectively. And so we had a small team. It was a really good team. The accounting org was able to make sure we had data in very, very good in real time. And we were able to match daily and weekly financials with what actually happened at the end of the month to make sure we had, the right sort of tracking along the way. But, when you're trying to grow 2, 3x year over year and you're trying to make sure your unit economics are positive, like, if you're off course pretty easily, right? It's not like a 1 basis point of margin that you're worried about. You're really worried about is the direction of where we're going in the right direction. We had really good dashboarding, reporting, and intuition to make sure we could do that work efficiently.
And to close out this part of the conversation, anything that you would go back and tell yourself now,
Yeah.
today, that you would have done differently, or any advice for the pre-announcement?
Not differently, Sasha, but there's things that happened that I learned from the leaders before me at Instacart. At the time I was on our senior leadership team. I was our only VP on it. We had 3 C-level execs who I learned so much from and still feel very close to. But a couple things. One, like, your job in running a company is to, yes, things are going to happen to you. So much of it is how you react, right? And from the minute we heard the news, I remember I had a pit in my stomach for the whole day. But the senior team around me went from woe is us to this is an opportunity. We have a chance to go change the equation. Like, let's go grab it. And so, the first thing I would say is, like, it will only go as far as, the founder, the leadership team drive it. And in every moment, you got to look at how do we react? How do we play? How do we move forward? And I wish I could have appreciated that at the time. I appreciate it so much more now, but I wish I could have appreciated that at the time. I think the second thing that's a learning from that time is, and I talk to founders about this all the time, having a shared enemy or having a really, really impactful mission. Those are 2 really galvanizing things for a company. One of the things people asked me a lot was like, "Hey, was it hard to recruit or retain people during that time?" I was like, "It was the easiest time ever," because we had like a mission, and Amazon's a wonderful company. It was wonderful for us to have them as sort of the big bad competitor coming in, right? Because we knew we had to execute faster, better, and we knew that there was things that we could do differently. We were the only ones that had been operating grocery logistics for 5 years, right? We knew about 2-hour delivery and grocery. No one else in the world really had done that. And so, I think that the idea of taking something that is around you and using that as a motivator for the organization is such a powerful tool. There was 2 of those. Amazon buying Whole Foods was one, and then COVID was the other for us. And it was a very different motivator in that it's our responsibility to help millions of consumers across the US get groceries safely, make sure our shoppers can operate safely as well. And that was, those 2 moments, I've never seen a team feel so connected and kind of work faster than you want them to. I mean, I always thought I was pushing, and the team during that time was amazing. It really was.
This is great. This is a perfect transition. One step happens that I want to set up this third, actually, pivotal moment, which
Yeah.
is COVID coming
Yeah.
in. You're tapped to sit in the CFO seat
Yeah.
at this. Tell us a little bit about what is different in your first maybe 30, 60, 90 in your original role coming in Instacart. And then how do you prepare for the 30,
Yeah.
60, 90 of the CFO seat?
Yeah. I mean, I think in some ways, they were similar in that, like, we knew we had a job to do. And look, I viewed the CFO role, I viewed my role when I was VP of strategy. We got to build a business. Like, I don't own the financials or the finance team. Like, we, the leadership team, are accountable for this business. And so I felt that more when I got promoted to CFO, obviously, because now there's more responsibility personally that comes with it. But the underlying ethos was really similar. To me, I'm a big believer of, like, the best thing you can do is move the metrics. Like, every great leadership team, every great CFO knows the 2 or 3 metrics that matter for their business. In an enterprise software business, you're moving new ARR and ARR total. You have good unit economics on the sales side. If you can do that well, you'll have a powerful business over time. In our business at Instacart, it was, how do we have a lot of GMV, a lot of consumers spending on the platform, and how do we deliver that profitably? If we do those 2 things, we'll generate bottom line profit as we scale, all good. But it was moving those metrics. And so my first 30, 60, 90, I told you what it was when I joined, and that we were losing $15 an order. When I took over as CFO, we had actually, because we felt so confident in our ability to move the unit economics, we again forward invested a little bit in consumer pricing. And my first 30, 60, 90 were, how do we go get that margin back? And so, in some ways, it was really, really, really similar. I think the other things, though, were, at that time, we had to purposefully start to scale the finance team a little bit more, start to get buttoned up on the journey of being a mature company. And so some of what my 30, 60, 90 were we hired a chief accounting officer, we brought in some more folks in the accounting org, we hired more folks in our FP&A strategic finance org. And so starting to scale out some of that. I think a lot more scaling, credit to Nick and the Instacart team who took over after I left. Like they've scaled it even more amazingly since then. But part of my first 30, 60, 90 was making sure that we started to put those pieces in place as well.
When you look back, what is something that you believe is one of the superpowers of Instacart that allowed it to buck the trends of the historical industry?
One of our cultural values at the time was, of course, but maybe. And it was like, of course, this had been tried and done before, but maybe this time is different. And so I think one thing is like we had a team and a founder and a broad organization that was incredibly resilient. Like it wanted to go figure it out. It was willing to get punched and get back up again. And I think that business takes a lot of resilience. It's a wonderful business. It is and with scale now, you're seeing the beauty of the business model, but it took a lot of resilience over the years. So that's the first thing. I think the second thing is in tech businesses that are operationally intensive, you have to take a bunch of complexity, really, really, really understand it, and then simplify it for the organization. And I think we had a group of people, and I put my team in this group of people that helped to do this, that were able to really understand. I used to say like content is king or queen. Like you have to know the 100 pages of detail, but the beauty is, can you summarize all of that on one page? And I think part of what we were able to do across product, across BD, across finance and the economics was really understand each of those areas. We had leaders who understood those areas deeply, but they were then able to roll it up and say, and so what all that means is we need to do these one or two things. And I think that rigor combined with that simplicity allowed the organization to move forward and deal with those trade-offs really well. And then look, it took some luck. We had 3 or 4 pivotal moments even in my time there. And those things could have been good or bad for the business. Obviously, losing $15 an order could have been really bad for the business, but it taught us how to be financially disciplined. It taught us that every minute counts and every cent counts, and that culture permeates today, right? Amazon, Whole Foods, we talked about. It taught us how to really be great partners to all of the grocery chains in the U.S. and all the retailers in the U.S. And that ethos lives on today. And then COVID obviously brought a ton of scale, but it taught us the importance of dealing with that and rising to the occasion of scale. It brought a mission to the company. It taught us how important our customers and shoppers are and how we got to be great partners to them in some tricky times. So, I think it was a little bit of all of that.
I want to get into the COVID moment for a third major pivotal point in a company. God, this is gold. But first, before we do, was there anything in your mind that changed in the balance of growth versus profitability before the CFO seat and then sitting in the CFO seat?
Yeah, no, to me, like I kind of looked at it the same way. So maybe a couple things. One, like I didn't change my relationship with the business or how I thought about where we should invest because my title changed, right? Like I wanted to act like an owner from day one. And, and part of the reason why I got to sit on our senior most leadership team from my, 6 months in is because, those guys saw that I cared about the business and I was going to do whatever I could to move it. And they were wonderful leaders. And so like, that the combination of those two things, I was afforded a lot more responsibility than I probably deserved at an early part of my career there. And I'm always very grateful for that. But the way we thought about it, and I got asked this question a lot now as a venture capitalist of like, do you care more if I grow faster? Do you care more if I generate more profitability? And look, the reality is like what I want is for you to grow and be profitable, right? Like the best business in the world improve their growth and improve their profitability. That's the honest answer. Now that's not always possible, and there are trade-offs. But what I love to see is the ownership from the team of, hey, actually, like 2, 3, 4, 5 years from now, here's what we think we can be. And here is the best way for us to get there. And that might mean, some of our best companies actually invested at times where other people were pulling back investment, right? Like, and some of our best companies didn't invest when everybody else was investing because they said, hey, we're not getting the bang for our buck here. Like, we don't need to spend more money. Like, we'll raise it, but we don't need to spend it, right? And so to me, the thing about Instacart that was unique is it is an economies of scale business, right? And so we always knew in order for the advertising business to really hum, in order for the logistics business to really hum, you needed to get scale across the country, scale both in a given city, but also scale nationally. And so we always knew we needed to keep growing. For us, the trade-offs were what was the cash balance to make sure that we could do that comfortably. And so we raised a lot of capital along the way. Were we growing in a way where we weren't compromising the future economics of the business? So, like, you could say, hey, I'm going to make it not just free for customers, I'll pay you to come. But to me, that was, you were going to get customers who I didn't know if they would stick around when we changed pricing later on. So we always try to make investments where we thought, hey, this is still in line with the long term of the business. And then, the third thing was, if those two things are true, can we get to where we need to go? Do we have confidence that we can drive the rest of, can we drive down our payment processing costs? Can we get more efficient on delivery? Can we make sure our support is really efficient? Can we start to build an advertising business? Can we do the other things that we need to do to be a great profitable company on the other side of it? And so it's always like those principles were always true. The facts year to year might change in terms of how aggressive we could or couldn't be. And so we did move around a little bit on how aggressive we were willing to be, but we try to live by those principles, for my entire time there, at least.
Yeah. So we sort of talk about like being intentional. You brought up this really good point. It's sort of being intentional about what the future state is
Yeah.
and how that sort of prepared through your journey is part of an important part about being a VC. And we'll get to that in a sec. But you can have the best plan and the best sort of idea of how to grow a business. And then these unpredictable moments
Yeah.
happen. In this case, we have a hopefully once in a lifetime
Yeah.
catastrophic event where there is lockdown everywhere. And the good news is every human and prey animal has to eat all the
Yeah.
time.
Yeah.
You're now in charge of this national logistics. What changes in this moment? It happened very
Yeah.
quickly.
Yeah. I mean, I think the first thing was, it was our team. I can't stress how amazing, our shoppers, the corporate team, like the leadership team, you just felt a great sense of responsibility, right? I had my mom calling me about her Instacart order. I had her friends calling me about their Instacart orders. Everybody now knows the company, knows the brand, knows what it does. And people might forget, like, that wasn't, certainly my aunts and uncles didn't know exactly what I did until after COVID, right? So you're kind of thrust into the spotlight, if you will. I think the first thing is we took the responsibility very seriously of, like, how do we do this well? How do we make sure we're delivering groceries to millions of consumers in a way that allows them to be safe? How do we provide for our shopper fleet in a way that allows them to do their job safely? How do we partner with our retail partners to make sure that we're helping their businesses in a time that's really tricky and complicated as well? And so we took all of that really seriously. I think, there's a couple of things now more on the business side that we had to do at the same time, which is everything you thought about your financials is going to look really different when your volume is growing, literally like 2x day over day, right? We would have these literally hourly charts where we'd see, like, oh, wow, like, today between 9 and 10, we're doing twice as many deliveries as we did yesterday between 9 and 10. And so I think part of the preparation for moments like that was really born out of what we were thinking in 2015 when I joined and before I joined, which is, do we actually understand our business really well? Right. And so, one of the things was, okay, like, our unit economics, do we understand what could happen with basket sizes going up, with our delivery volume increasing, with, all of the different features that we have on how, shoppers earn on our platform, on our support ticket? Do we understand what they are and what might break and what won't break? Yes. And we said, okay, and we can't understand it weekly. Let's actually look at it daily. And so our team had daily unit economics that we could cut by everything. And it was amazing because we had done the work literally 5 years earlier. It took us 3 days to go from weekly to daily at the beginning of COVID. So his first thing is, like, can you get the right info? Our engineering team not only scaled the platform to take on 10x the demand, which was amazing on its own, but they also made sure that we had the right metrics around and the right dashboards around how, the site reliability was, but also what volume looked like, what users look like, where we were seeing breakage, if anything. And so thing number one is, like, can you get fact base quickly? Do you have the intuition to interpret that fact base? And that was built over a long period of time. Thing number two is, are you comfortable making quick decisions that may not be perfect, but because you've developed intuition, because you have the fact base, you can actually make those changes relatively quickly. One example for us is, we were spending a reasonable amount on consumer marketing in 2019 because we were growing the business. We had good unit economics on marketing. We had hired a marketing team, and we called them pretty early and said, hey, like, for the next foreseeable future, like, let's turn off all of marketing because, hey, it turns out we can't even take on all of the demand that's coming without marketing. Instead, let's use this money to try to make sure we can have enough shoppers and drivers on the platform, and try to create more opportunities to earn for, a lot of people who maybe aren't driving for Lyft and Uber at the time or aren't working in hospitality at the time. And so we very quickly made a shift without knowing exactly what the impact would be. We had enough clarity, the fact base, and enough intuition that we were able to make some of those decisions really quickly. And so that was the reaction. The reaction could happen quickly because of the preparation that had happened intentionally over many years ahead of that. And I still laugh with one of my colleagues, this guy on my team named Will, who we turned off some marketing that he said to me, like, we really shouldn't turn this part off. Like, this will help us retain customers. And I was like, no, we're going to turn it all off. And we joke literally to this day of, like, he's like, I was right. And I was like, you were right. You had better intuition. Your intuition was right. But if you can get 9 out of 10 decisions right and you're doing it in a matter of hours, I think you feel like you're doing pretty well.
So you're at Instacart for about 6 years. You probably have more incredible stories and experience than
Yeah.
people who have careers at many other different kinds of companies. You have this all in one amazing outcome. And then you make the transition to Excel. So I
Yeah.
think one of the questions that everyone wants to know is, how do you land a job at one of the most successful VC funds of all time?
Yeah, well, you get very lucky. The folks at Accel are wonderful, and I was lucky enough to have had developed a relationship with a few of them just in my own network over a period of time. I think part of it for me was because a lot of my job at Instacart was actually interacting with investors. And Accel wasn't an investor in Instacart, but I had spent a lot of time with our own investor base. And part of the mantra I tried to have on the CFO side is, like, we try to be pretty transparent about what was working and what wasn't. Of course, we tried to sell our business to investors, meaning, we were fundraising at times. We were painting the picture of what it could be, but we always tried to do that in a very transparent, very metrics oriented, high integrity way. And so I was blessed to have great investors who I had a great relationship with. And when I decided to leave, which was a tough decision on its own, and move over to venture, I was lucky enough that those investors were really supportive and said, "Hey, we love to talk to you about investing with us, and we'd love to introduce you to other good investors because we've really enjoyed getting to know you." And so through that, I got to meet the Excel team. It was, one of my mentors turned investor, and it had said, "Hey, you should meet folks at Excel," and I got to meet one of my partners, Miles, here, and just chat about venture broadly. And we enjoyed the conversation so much that at the end of it, we both said, "Should we talk about Excel more, more directly?" And got to meet the rest of the team, and was fortunate enough to be able to join. And so there's no playbook or formula. There's no, I think to me, it's I think if you try to work with great people, I go back to where I started. Like, I've tried to work with great people who I have learned a ton from. I've tried to do really good work with them, for them, alongside them, and I've tried to do that with, as much integrity as I could, and hopefully that's led to other doors opening as best as they can. And I was lucky that some of that allowed me to have the chance to come work at Excel, and work with some wonderful folks here.
What is it that got you excited about Excel specifically?
Yeah, a lot of Excel's investing style is actually, like, it's a couple of things. One, it's investing in companies that, it's the history of the growth fund at Excel is actually investing in bootstrapped companies that hadn't taken venture money. There's legendary stories of investing in Atlassian, investing in Qualtrics, investing in Braintree in Chicago that hadn't never taken a venture dollar. We're in One Password now, and the list goes on and on. But part of the mantra was, like, because the team had been able to be the first partner to some of these bootstrap companies, a lot of it was a responsibility of trying to help build alongside them, right? Like, hey, let us help you hire, your go-to-market leader for the first time. Let us help you think about how to price this product. And so it's a group of folks who I think appreciated what it was like to work within a company and kind of help a company find its way. And so I was really, really drawn to that aspect of it. And the other thing is, the growth practice at Excel started in, I think, 2008. And a lot of the partners here were the first hires as, associates to that growth team. And so there's very much like a pride and entrepreneurial culture around, hey, we haven't earned anything. You were very nice to say, Arthur and Jim founded an amazing firm 40 plus years ago. the growth team is a much newer part. It's very, very established 15 years in, obviously, but it's, the people who are here remember when they were the first hire, right? And so it reminded me in a lot of ways of the pride that I felt in having built one piece of Instacart, or be part of that journey. And I was really drawn to sort of the ownership, the love, the sort of just a responsibility that the folks I met felt to continuing to keep Accel, kind of a top tier growth investing firm and investing firm broadly. And so that passion was felt very, very easily to me through the process.
I love it. And one last question about sort of the role of a partner at a venture fund.
Yeah.
Any advice for CFOs or people listening out there about how to position themselves to make the leap into a career in VC in the future?
Yeah, I mean, look, it's I would say, like, I didn't ever do anything intentionally to try to, and you can. I didn't. It really was a little bit fortuitous. I think the things that I would highlight, Sasha, are the jobs are different. I think people think that it's glamorous to be a venture capitalist and it's hard to build, and the reality is, like, both are very hard, right? It's very hard to go find the next great company, convince that founder and management team to work with you, have conviction in investing, our partners' money behind it, and we take that responsibility very seriously. It's so, and it's hard. The feedback cycles are a lot longer in venture than they are. When I just told you, when I joined Instacart, we were losing money on every order, and we changed that pretty quickly. Like, turns out a couple months in, I was like, hey, I've made a difference. Like, that's great. Whereas, on the investing side, I think it's a different business model in a lot of ways. So the thing that I would tell folks is, genuinely be curious about areas of technology that you find, either business models, category, sectors. Genuinely be curious. Try to develop relationships and think about where you would invest if it were you, right? Like, it's always great to learn from, talk to your network, and have a point of view. Be willing to take on risk without knowing every answer. Most CFOs are pretty conservative, and they, you want to know every answer before you kind of raise your hand. Venture it's different. You do a lot of work, you do a lot of diligence, but it's a risk-taking business by sort of definition. And so be prepared to jump into that. And then the last thing I would say is be prepared to be a rookie again. Like, I felt like I was kind of a seasoned, grizzled vet by the end of Instacart, and moving over to investing again, like, I'm a rookie. There's folks who are much younger than I am, but have a lot more experience having seen investments go well or not well. And those are folks I try to learn from every day. And so I think trying to handle that humbly and learn and act like a rookie is sort of the best thing that I would say. And hopefully one day I'll be a vet on the investing side as well.
I know, maybe one day you'll even get a gray hair or two.
Yeah.
So I imagine that a lot of this audience is listening going, God, I would love to get you on my cap table and have an investment, because you just have such incredible experience and perspective, intelligence, humbleness. What is it that gets you excited about a
Yeah.
deal?
Yeah, I mean, look, I think to me, I'm still a financial person at heart, right? So I do, I do like to see, well, maybe a couple things. One, like, I love to find founders who are passionate about what they're building, who have high integrity, who, to me, like, I think of this not as like a dating transaction. You are married, right? Like, if these relationships work well, you work together for 10, 15 years. A lot of the Instacart board has been on the board since 2012, 2013, right? And so, they should be long marriages. At Accel, we have, Rich Wong, one of my partners, is still on the Atlassian board, many 15 years later, right? And so in the cases that they go well, these should be, you're aspiring for them to be married. So I really look for people who are hungry, who are passionate, and who ultimately are good people who want to build something like big, important, and do it the right way. That's thing number one. I think thing number two, like, I do love to find businesses that have a point of view of what they're building, and have some demonstration of why that point of view can happen. Right? There was a period of time where actual traction didn't matter and sort of actual users didn't. I love to see sort of the leading indicators of, hey, here's why we're so excited. Here is the customer NPS that we're seeing. Here's the sort of customer feedback that we're getting. Here's how some of the leading indicators are really working and why we think we can build it over time. And then look, I personally love to see the vision of how you can build something big. I mean, I think it's the most fun is where you're building into a category, an area that can end up really being defining, right? That was what seeing the cart ticker is one of the coolest things that I think will ever happen to me. And I aspire to partner with founders and companies that have tickers one day, right? And there's obvious areas today. Obviously, AI has gotten a lot of that backdrop, but there's big pockets of fintech that are still untapped. There's big pockets of consumer businesses. Like there's a lot out there, but being able to try to build something and articulating why you want to build something that's truly unique and special, I think is amazing. So I'm sure there's a more articulate version of that answer, but those are a couple of things that resonate with me.
Nice. And how can people get a hold of you if they want to?
I am, SPS@accel.com is probably the easiest way. You can shoot me an email, and I would love to chat.
Awesome. Well, thank you so much. Thanks for tuning in to Turpentine Finance. Share it with your executive team, direct reports, friends, and family. And if you want to support the show, the best ways are to leave a review wherever you're listening and subscribe. Turpentine Finance is part of Turpentine, the podcast network behind Moment of Zen, Turpentine VC, Age of Miracles, and more. Shows for experts by experts in tech.